You made your first investment. Maybe it was a stock you heard about from a friend. Maybe it was a crypto coin that seemed like it was about to explode. Maybe it was just something you threw a few $100s at because something inside you said this feels right. And then it went wrong. Or maybe you are standing right at that edge right now, trying to figure out where to even start, feeling like everyone else knows something you do not. Either way, what you are about to hear is going to save you from mistakes that quietly destroy the financial futures of thousands of people every single year. People who are just as smart as you. People who wanted the exact same things you want. This is not theory. This is the painful, real, expensive truth about what actually goes wrong when beginners step into the investing world and what you can do instead. Let us start with the biggest one. And this might sting a little. Most beginners invest with their emotions and they do not even know they are doing it. Think about the last time you saw a stock skyrocketing on the news. Your heart started beating a little faster. There was this feeling like if you do not get in right now, you are going to miss out on something massive. That feeling, that pull in your chest, that is not instinct. That is fear wearing the costume of opportunity, and it costs people thousands of dollars every single year. When a stock is already all over the news and everyone is talking about it, the people who got in early are often already looking for the exit, and you, the person just arriving at the party, are essentially holding the door open for them while they walk out with the profits. This pattern repeats itself over and over and over again. People buy high when excitement peaks, and then panic sell low when things start to look scary. It is the single most common wealth-destroying cycle in all of investing, and it is almost entirely driven by emotion. Here is what that actually looks like in real life. Someone puts in money they cannot really afford to lose because the excitement made it feel like a sure thing. The investment drops, they panic, they pull everything out at a loss. And now they are not just poorer financially. They are poorer in confidence. They start telling themselves they are just not cut out for this. That investing is for other people. People with more money, more connections, more knowledge. And they walk away from one of the most powerful wealth-building tools that exists. Not because they were not smart enough, but because nobody ever showed them how to separate emotion from decision. If you are recognizing yourself in any of this right now, I want you to understand something. That is not a flaw in you. That is a flaw in how most people are introduced to investing. And there is a better way. We have related programs linked down below in the video description. I am not going to pressure you into anything because honestly, the people who need it most tend to wait the longest, and that waiting is exactly what keeps them stuck. But if even one thing I say today resonates with you, scroll down when this video is over and take a look. What is there could change the direction of everything? Now back to the mistakes, because there are more and they get deeper. The second massive mistake beginners make is putting everything into one investment. This sounds so obvious when you say it out loud, but when you are excited about something, when you believe in it, when you have done your research and you are convinced this is the one, everything in you wants to go all in. And sometimes it works, but when it does not, and statistically the odds are not in your favor when you are concentrated in one place, the damage is catastrophic, not just to your bank account, to your entire relationship with investing. Diversification is not just a word finance people throw around to sound sophisticated. It is the mathematical reality that spreading your risk across different types of investments protects you when one of them fails. Because something will always fail at some point. The goal is that when one thing falls, everything else does not fall with it. People who have been investing successfully for years understand this at a bone-deep level. They have usually learned it the hard way. You do not have to. Mistake number 3. Waiting for the perfect moment to start. This one is silent but devastating. Because it does not feel like a mistake. It feels like patience. It feels like wisdom. You tell yourself you are just waiting for things to settle down in the market. Waiting until you understand it better. Waiting until you have more money to work with. Waiting until next month, next quarter, next year. But here is the brutal truth about waiting. Time is the single most powerful variable in building wealth through investing. The earlier you start, even with small amounts, the more time your money has to grow through compounding. Compounding means your gains start earning their own gains. It is money making money. And every month you wait is a month you hand back to the universe and never get again. People who started investing even modest amounts consistently and early did not get rich because they were geniuses. They got rich because they started. That is it. They just started. And they kept going even when it felt uncomfortable. The next mistake is following tips instead of understanding the underlying investment. Someone in a group chat says this stock is about to go crazy. A coworker mentions their cousin made a fortune on something. A stranger online seems very confident and very convincing. And suddenly you are making financial decisions based on information you cannot verify from sources you do not actually trust, about something you do not fully understand. This is how people lose money that took them years to save. Not because they are careless, because they are hopeful, because they want to believe there is a shortcut. There is not, or if there is, it is not the kind being sold to you in a text message. Understanding what you are investing in does not require a finance degree. It requires asking simple questions. What does this company actually do? How does it make money? Does it have debt? Is the industry it is in growing or shrinking? These questions take time, but that time is the cost of investing responsibly. And the last mistake, and this one is deeply personal for a lot of people, not investing at all because it feels too risky. You look at the stock market going up and down and it feels like gambling. You think of all the stories you have heard about people losing everything, and staying on the sidelines feels like the safe choice. But here is what nobody tells you when you make that choice. Inflation is happening whether you invest or not. The money sitting in your savings account is losing purchasing power every single year. The safe option is not actually safe. It is just a slower way of falling behind. The people who are building real financial security are not necessarily the ones taking wild risks. They are the ones who understood that doing nothing has its own cost, a cost that compounds just as surely as interest does, except in reverse. Think about where you want to be in 10 years, not vaguely, specifically. What does your life look like? Does the path you are on right now get you there? If the answer is not a confident yes, then something needs to change, not someday, not when it feels safer. Now. Everything in this video has been pointing toward one thing. You already have everything it takes to do this differently. What you need is the right framework, the right education, and the right moment to decide that your future is worth protecting. The related programs in the video description below are built around exactly that, giving you the clarity, the strategy, and the structure that makes the difference between someone who keeps watching videos hoping something changes and someone who actually changes it. Most people will scroll past it. And most people will still be in the same place a year from now wondering why nothing has shifted. Do not be most people. Go check it out right now while you still have this feeling in your chest, because that feeling is telling you something important.